mostly lower, with emerging market shares falling 0.8%, and this was pressurized by the slide in China's semiconductor sub-index that weighed on other chip makers. They were also spooked by regulatory crackdowns and the rising COVID-19 cases in China. Investors pulled out of highly valued tech stocks, with Alibaba and Tencent dropping between 2.5% and 3.2% respectively. European markets were muted as investors assessed global economic indicators and rising COVID-19 cases in the search for direction. Over in the US, we have stock futures which are little unchanged right now, with the US investors digesting a mixed bag of economic data. Locally, the rand fell 0.4% after the health minister said he'd not recommend further easing of COVID-19 lockdowns despite falling infections. To talk to us about some of the themes playing out and also review the week that was, we are joined by Patrick Matidi, who is the head of equities at Aluwani Capital. Patrick, thank you so much for your time. Let's check in on the trading week that was. How would you characterize it?
Yeah, good afternoon, Nastasia. Thanks for having me. It was a very constructive week. If you look around the globe, financial markets are trading at or very close to the all-time highs. So despite some of the concerns that are playing out from a Delta variant point of view, markets continue to find favor with investors, led by the US, which closed at an all-time high overnight. And then also domestically, I think a day or so or two ago, we were at our all-time high. The only place that is still lagging is Asia, and I think they have their own issues with regards to regulatory issues. But also, it would appear that that's the one region where the Delta variant is actually playing havoc, as evidenced by the lockdowns that we're experiencing.
Okay, so earlier this morning we had a sales update from Massmart. Let's unpack Massmart a little bit further by looking at perhaps your thoughts on, core operations, the turnaround by the new management. What do you make of Massmart as a share?
Look, the numbers that they reported, were fairly bad, below expectation. They reported sales across their major business segments, which is game stores, macro, builders warehouse, and the like, that were lower, anywhere between 7 and 9% compared to the same period last year. Bearing in mind that last year was a fairly depressed base, given the lockdowns. So it would appear to us that the turnaround story is at least delayed. It is taking a while to come through, as evidenced by those numbers. But also, one has to worry because that is largely the food segment that is underperforming. And then we're seeing the other guys, especially your Shoprite and the Pick and Pays, still holding up quite nicely. So we are a little bit worried that the prospects may not be as promising as perhaps one would have anticipated, given the changes in management and the refocusing, especially at the game stores.
All right, so let's talk about China. Over the past few weeks, it's made headlines, whether we're talking about China's regulatory crackdown, etc. What is the investment mood in China, and how are you managing that risk as it pertains to some of the tech stocks?
Look, we're managing that risk with some difficulty, largely because the changes in regulation, some of them, I guess, justifiable from a social stance point of view. I guess the risk from investors is that we hardly ever see them coming, so they tend to be very sporadic, they tend to be very random and also predatory in terms of how they are applied, which obviously causes a lot of uncertainty, as you can see with the wild swings in share prices, especially out of China in the tech stocks. So one has no idea as to what's going to come tomorrow or next week or next month. And as a result, we are seeing a lot of foreigners, especially based in the US, actually disinvesting and saying, well, maybe the party is over, let's look elsewhere for better returns. But for us here in South Africa, I would not have that option, largely because one of our bigger stocks, which is Naspers, holds Tencent, which is listed in Hong Kong, with a lot of operations in China. So that risk, unfortunately, we have to live with and just watch, the regulatory landscape unfolding in front of us.
So we're in results season locally as well as US, but let's focus locally for a moment. Which companies are you keeping an eye on in terms of their financials?
Look, I think given the trading updates we've seen the last few days from the banks and the share price reactions, I think to the extent that they are able to actually report numbers that are within expectations, if not better, I think there's a lot of share price appreciation to be had there. We've already had Nedbank reporting, I think 2 days ago, and we saw what happened with the share price then. And the other guys will report in the next couple of days within the financial space. I think in the industrial space, it's going to be a mixed bag. We are expecting good numbers from the food guys, but we have some concerns with regards to the apparel guys. So we'll have to see how that plays out. And then in the resources space, our view is that the party is almost over. We've seen good numbers come through, from Anglo's, BHP, and the likes, with also good dividends coming through from the platinum guys. But we do worry that going forward, a lot of it is already in the price, and therefore there's scope for disappointment. The only area that is a stay away for us is the gold sector, and we've seen that a massive underperformance coming through from the likes of Anglo Gold, largely operationally, but also from a sector viewpoint of view. We are worried that given what we're seeing from an inflation point of view globally, that space is probably not the one to be in going forward.
All right, US CPI figures came out and also the July PPI figures. Where does it put the inflation debate? Where do you sit when it comes to that debate?
Sure, that debate is very divisive. It kind of splits the entire team in half. Our house view is that inflation is something to watch, but that it will pass. It is transitory. It is coming through as a result of especially the U.S. economy opening up, post the lockdown. So it is expected that there will be some pent-up demand, that there will be some value chains that will need to be reestablished. And as a result of that, there should be some prospect for inflation to come through. But through the cycle or in the normalized sort of a world, that should subside, once everything is sort of back to normality.
All right, Patrick, thank you so much for your time. That is Patrick Matidi, who is the head of equities at Aluwani Capital.